Hi, ladies and gents. Welcome to a quick podcast where I'm going to be looking at petty cash book. Just a couple of terms that you need to be aware of. The first thing is petty cash. That means very small cash payments. So when people talk about petty cash, they're talking about maybe payments for less than $50. Petty is an old English term. One of the things it can mean is small. So you'll sometimes hear people called petty-minded, and that means it's people who really get bothered about small problems. Imprest system, that's a system where a float is maintained for payments, and basically at the end of the month it's returned to the original level, or maybe at the end of the day. So for example, in a shop, they may introduce an initial amount of £200 or $200 and use that for buying tea, coffee, etc. At the end of the month, if the total of all of the payments is $120, $120 will be added back so that it returns to the original value. Petty cashier, that's just somebody who's in charge of the petty cash. So in the real firm, it's normally quite a junior job because the amount involved is relatively small, and it could be somebody then who's trying to get experience and trying to get the first job of any responsibility. Petty cash voucher is the source document. What quite often happens with this type of transaction, if you just go to buy, 4 postage stamps and the total cost is less than $1, then maybe you won't even get a receipt. So the voucher's filled in and it's given to the person who's gone and handed over the stamps, and it's used then as proof that the transaction's occurred. Okay, what does it look like? Well, it's different to anything else you've seen. The first bit isn't that different. So you've got a debit column and a credit column, but the details normally get written in the middle. And then you've got the dates in this column here. Voucher number, the vouchers for petty cash will normally be sequential. So when the business first opens, they will start at 1 and they will go up as high as they need to. Okay, but the thing that's really different, these 4 columns here, they're called the analysis columns. And what they do, we put the payments then into a particular column and we do different things with them. So we'll talk in a minute about what we're going to do with the purchases ledger column, because that's different to the other columns. But one of the big advantages with using a petty cash book is we don't need to then go and put all these really small transactions individually into a ledger account. What we can do is put the totals in once a month, and that saves quite a lot of work. So we've got 3 transactions here to do, and then we're going to balance off the Imprest system. In this case, we're going to do it on the 1st of June, so in the next month. On the second example, I'm just going to show you very briefly after we've finished. We'll see something else you sometimes see in exam questions, that they actually make the balance up at the end of the month. Okay, so first transaction happened on the 19th of May, and it involved travel. So hopefully what we're going to see here is we'll have 2 $16.24s input. One's going to be input in the payment side, and that's part of the double entry system. And the other entry is going to be under travel. 23rd of May, you've got your stationery. So just let's make sure that happens. Okay, so there should be an entry, $12.78 in payments, $12.78 in stationery. And the final entry that's going to happen is this entry for the another entry for travel. Right. We balance this off slightly differently to how we would normally balance off any of the other ledger accounts we've dealt with. So the first thing that we need to do, we need to find a total for all of our payments and a total for each of the analysis columns. Okay, so we know that the total of our payment is $168.06, and that's made up of a $69.29, $24.65, $35.42, and $38.70. So what we then need to do is to find out how much cash is carried forward to the next month. So we input the balance carried forward, and we know that the debit column is 250, because these two added together is 250. Okay, so put that in, and then we need to put in the balance carried forward. And the balance carried forward will be 250, take 168.06. which is $81.94. That will give us a balance brought forward at the start of June. And then we would add in the extra $168.06 to take the balance up at the start of the month back to $250. Right, I'll deal with the stationery account now, the postage account and the travel account. So we've got the credit entries, they've been made in the petty cash book. But what we're going to do, instead of putting all three entries into the stationery account, we're just going to put the 69.29 as a debit entry. And it's a debit entry partly because obviously because it's an expense, and also we've got the credit entry already done in the petty cash book, and therefore it's got to be a debit entry following the duality principle. Postage, $24.65, similar thing. And we'll do the same for travel. Now, the purchases ledger bit's slightly different because that means that we've paid money out to our suppliers and it's been linked to a credit purchase. So we've got a supplier, E. Davis. I know it's E. Davis because it says E. Davis in here. And what we don't do is let's just say purchases ledger. Is we don't do a grand total, we put the individual entries in from the purchases analysis column or from the purchases ledger analysis column, and that's because every individual account will need to be updated. But it's still a debit entry because it's going to reduce the amount of money that the business owes to its suppliers. Okay, so that's basically all we're going to do. Very quickly, just to show you the slight difference if the amount of money is going to be made up by the cashier at the end of the month rather than the beginning of the next month. And that's because we're going to need to have a balance carried forward, and that balance carried forward is going to have to be the 250 that we make our petty cash float up to. So what we're going to see here is that we need to put in a debit entry to make both sides $418.06 of $168.06. And the key thing to remember here, it's not all these numbers that we add up. We've got a subtotal here for the individual amounts for all the transactions, and we add the $168.06 to the $250 to get the totals. So that's a key thing to remember. Right, hopefully you got all that. If not, you can replay it. Obviously, I've got a student example for you to do. If you're doing this for the first time, you won't be able to see the answers, but what you'll need to do is save your work on your area and then share it with me so I can mark it. If you had it sent to you as a revision resource, then you will actually have copies of answers for you to actually review and compare. Thank you very much for your attention. Hope to see you soon, and don't forget to ask me any questions.